All right, welcome back to the Cow Guy Close. I am Scott Shelby, otherwise known as the Cow Guy. All right, this is a true story, actually. Well, I used to have an old boss that would constantly remind me, you don't know what you don't know. And I think he could be saying that to Jay Powell at the Fed right now. What does that playbook look like now? Now that we've had this Russian invasion, will it slow the pace of tightening, or is it full steam ahead? I mean, the volatility is surely to cause a lot of us investors some angst. Will the Fed add to this, or are they going to calm things down? Are we going to see the Fed take their foot off the gas? Who knows? My next guest, I think, knows. She's got opinions on this, and I'm sure she's glad to share them with us. It's Rebecca Walser. Thank you very much for joining the show, Rebecca. I can't help but think, about I've beaten this quote to death with Mike Tyson. Everybody's got a plan until they get punched in the face. But now that we've gotten through that, we've been punched in the face. What's the plan look like? Have we done enough to maybe to push the Fed off of the plan, or are they going to be full steam ahead? What are your thoughts there?
This is the most convoluted and complicated thing to analyze and to really get a clear vision of where it's going, right? Because on the one hand, you definitely know that with war happening for the first time on the European continent, and I don't even know how long, Scott, you might know, you know that the Fed is going to say, oh, wow, we can't go too hard. We can't tighten too much. This is already going to have reverberations throughout the economy. But at the same time you say that, you know that, let's just look at 2020, because the 2021 numbers aren't out yet, and they're going to be abysmal, by the way. In 2020, the United States was the largest per barrel producer in the world. We produced over 11 barrels of oil per day. Russia was a little over 10 million barrels per day, and Saudi Arabia was a little over 9 billion barrels, can't say this, per day. So, of course, now with the Biden administration, the United States has pulled back, stopped oil and gas leases, all of these things. So that's not going to be the case for next year. But that leaves Russia in the top position of the highest energy producer. And so if you are saying, OK, let's not tighten, or let's not tighten as fast as we were going to tighten, because that's going to obviously be a problem with the war going on. But yet you decide not to do that. And now Russia's energy prices in crisis with Germany and all of those things with the Nord Stream 2 and all of these things are just going to have an additional inflationary impact. So it's a catch-22. And I blame the Fed for this. They backed themselves into this corner, Scott.
I agree. I blame the Fed. And you know what? Look, I'm not supposed to get political on this show. I try not to. Everybody knows where I stand. But what bothers me the most about this, Rebecca, is the fact that, we're talking about energy to fuel the country. Our gas is our oxygen. That's like politicizing breathing. We need it, right? And I would argue this, and tell me if you think I'm wrong, and that's okay if I am. I argue that if we had a decent energy policy with gas prices a lot lower, and we were, energy independent once again, we wouldn't have to raise rates as much.
Right. 100%. Of course, it's all interrelated. As you know, all of these factors go into a hodgepodge and are all mixed together, and it's very hard for us to allocate any particular percentage to any one factor. But you're 100% right. Had we maintained our energy independence, we would not be nearly as beholden to Russia, to Saudi Arabia, to OPEC nations as we will now be. I mean, it's so sad. And even with the court injunction to not cancel leases, this Biden administration is still doing it. I don't understand. It's lawless. It's totally lawless.
Yeah, well, it's like nonsensical. And like I said, it's not political, because that's like saying breathing is political, right? And we need the energy to breathe. And for some reason, we've decided that we have to go pay more for the air we breathe. So, all right, here's the $64,000 question. If that shows my age, because that doesn't matter anymore, right? It has to be $64 billion now, or trillion if you're on Capitol Hill. It's a $64 trillion question. How much does that change the Fed's, outlook here? I mean, how many rate hikes are we looking at?
Obviously we had the outlier of 7. I say we still have 3. I just don't know how aggressive they're going to be. I mean, 50 basis points is off the table. That's not going to happen. I still think that we'll have a 25 basis point hike, especially, Scott, let's look at the market. The market is so fickle, all right? It went down. I was looking at gold. I was looking for gold to break through its resistance at 1930. Yesterday, before 8 a.m. in the morning, it was at 1965 on the continuous contract. Now it's down to 1888 as we speak. It's like, wow, this market just all of a sudden just discounted this war. And why, Scott? The reason why is so important. Because they said to themselves, the Fed won't raise rates now, they'll be more accommodative. So let's go back to the party that we've been used to having since 2008.
Right, exactly. And answer me this, too. I said it in the last segment. I've been doing it 35 years. I'll tell you right now, the most important thing as an investor or as working with investors is on, say, yesterday, they weren't in a position. If they had to buy, it's a bad position to be in, right? So those that bought yesterday had to.
Yeah.
Those that sold yesterday could. You want to put your customers in that category, right? They want to be able to sell. And again, the day, if you had to sell today, it was because you had to. And if you were buying today, it was because you were able to. You could. And those are the two biggest things. It's so simple when you really boil it down. And that's the place that you want to be in. And giving yourself a decent plan, which I know you guys are planners, is how you put yourself in that position so the red mist doesn't come down and you lose all perspective.
Exactly. And people get so emotional, you know. I mean, obviously the market is done mostly through institutionalized trading and algorithms, and we know that. But when the market starts to see just the hint of, oh, okay, the Fed will do this, or the Fed will do that, or Russia will do this, or Russia will do that, or the NATO will do this, or NATO will do that, or Germany, it's so many factors going in. But people at the end of the day keep expecting this Fed to be accommodative.
Right.
And if we are going to expect that in the middle of 9.7 PPI and 7.5 CPI, when are we going to raise rates, Scott? When is it going to happen? I think we've proven that MMT does not work.
100%.
So period. End of story. Like it's the nail in the coffin has been shut and it's in the ground with the dirt on top of it already. Let's stop acting like it works. It is a failure. Period.
Okay, you can't be so right or you're going to take my job, all right? So stop it. That's awesome. I really appreciate everything you said. You were absolutely spot on. Your content's wonderful. Thank you very much and have a great weekend, Rebecca Walser.
You too.